For Dukascopy TV, I'm Alex Isaac with this edition of the Weekly Wrap-Up. Joining me for a review of the past week is Account Manager at Corner Bank, Franklin Koshaj. Franklin, what do you think have been the main market movers this week?
Alex, certainly we shouldn't ignore the geopolitical events. It's obvious that the market is taking a fear in Ukraine, the Palestinian tensions, and since yesterday in Iraq. Having said that, we do believe that the most damaging effect has been the Russian sanctions from the European Union that started last week, and they are continuing into the beginning of this week. And as you can see also from the markets, the major reaction has been on European bourses in Germany, which had a major relationship with Russia in terms of oil and energy and gas, as well as the company's been selling quite a lot of commodities into the Russian market. On top of this, yesterday, President Obama initiated a two-way entry into Iraq, one humanitarian, one with airstrikes, and that gave even more pressure into major markets. And that's why we do believe that a continuation of this could have more negative effect in the shorter term.
As the geopolitical crisis continues on, will both it and the sanctions imposed continue to dominate for the near future?
100%. As you can see, the situation started last November with Ukraine. It has spoiled into different markets, into different political countries, and it's just reaching the tensions now, the highest, with Holland, Germany, all going against Russia and taking the part of the US. Before that, I don't know if you remember, they were really unhappy. European Union was really unhappy to take extraordinary measures and sanctions. But after the flight was brought down, then there was nothing else to do but just to show their teeth on their side. So we do believe that this is going to continue in the next couple of months until a solution is found about Ukraine and Russia. And then slowly we'll see what happens with Israel and Iraq.
The ECB rate decision came out yesterday, and most economists were excited to hear what was going to be said, and many were disappointed. Do you think the ECB conference was a letdown?
In specifics to the yesterday, we didn't expect much. Generally speaking, since the beginning of the year, the ECB has been a letdown, and you can see that on the market. Mr. Draghi has been continuously trying to threaten with his bazooka on QE, but of course we all understand that ECB and Bundesbank are not really happy with any quantitative easing. And yesterday, although we didn't expect much, he threatened again with further action on QE. But again, he spent most of his time showing how the previous accommodative policies and measures have taken an effect. In the meantime, fundamentals have not been good. And Mr. Draghi tried to avoid the focus from the economic news and growth into what happens in Russia and the tensions there. So I presume there was nothing new that people got from that meeting yesterday.
And finally, what do you think our viewers should keep an eye out for next week?
100% we ask all our clients and viewers and every investor out there to be extraordinarily careful. It's the summertime with volumes being really low, and any moves can have a profound effect. First of all, in terms of fundamentals, definitely we have to keep an eye on the CPI data. There is a major risk for Europe to go into deflation, if not there already. And any CPI data that could disappoint could bring even further pressure on the euro and maybe the major indices. On top of that, the ZEW survey from Germany will give us another idea of how the sentiment is in terms of the business community locally. And if interested also, we will also have to keep an eye on the CPI data from the UK. BOE meeting yesterday didn't give any new points of reference, but everybody will be looking at the CPI report to get an idea of any interest rate hikes in the shorter term. In terms of technical levels, we have to highlight the break of major trend lines in the 2011 rally after the European debt crisis. I need to make it very obvious that DAX, CAC, FTSE and the major European indices have been underperforming. They broke these levels, and therefore it could be a free fall with not much support for the time being. Yesterday DAX broke the 9,000 level, so we'll see how is that going to be retested or supported. And going forward, we have to see how the American markets are going to act, because S&P and Dow Jones are still above their 200 moving averages. So on a technical perspective, the damage has been done on the European markets. We have to see if it's going to spoil into the US, and then we can have an even bigger sell-off on a technical perspective.
Thank you, Franklin. For more in-depth analysis of what's making the financial news this week, be sure to check back in with Geopolitical TV. Goodbye.